my name is Kelly Cannon, and this is the Salt Lake Tribune Daily Buzz, a video series where we bring you the important story of the day. So shares in the Utah-based Zions Bank Corporation plunged on Monday as the effects of the collapse of two other large banks rippled through the U.S. financial system. In a personal letter sent to bank customers, Zions Bank President and CEO Scott Anderson acknowledged that the failures of the Silicon Valley Bank and Signature Bank, quote, have rattled the markets as well as people's nerves. But he said that Zions remained in strong financial condition with access to tens of billions of dollars of readily available liquidity. Zions share prices nonetheless fell 44.1% early Monday as the markets opened, declining from $40.35 to $22.55, and trading in its shares and those of three other regional banks was temporarily halted amid all of volatility. Zions closed the day at $29.97, down 25.7%. Now, all of this started with the collapse of the Silicon Valley Bank last Friday. This bank was known for financing technology startups like those in Utah Silicon Slopes because it offered leverage that news companies couldn't access anywhere else. However, when inflation began going up, many of the bank customers began pulling their money out of their accounts in order to meet their immediate needs. The bank had to find new ways to meet those customer withdrawals, and it ended up selling a $21 billion bond portfolio at a loss. And then when it tried to fill that loss with a capital raise. It announced it would sell stock to fund its funding hole, but venture capitalists who were investing in some of those startups instructed them to pull their deposits out from the bank. More clients got spooked, and it started pulling their money as soon as possible, causing a run on the bank. So since the bank's failure, it's been seized by the Federal Deposit Insurance Corporation, or FDIC. Gavin Christensen, the founder of Utah's first seed fund, Kickstart Fund, estimated that half of Utah startups were directly impacted by the bank's failure. And if the federal government hadn't offered financial relief, all of the state's startups would have suffered. So how is the failure of Silicon Valley Bank tied to Zions Bank? So it doesn't have any direct ties, but it could be in the same boat as Silicon Valley Bank when it comes to capital assets versus losses on security. An analyst with the Dow Jones Company published a report Saturday saying that some of the Silicon Valley Bank's underlying problems stemmed from its tight focus on the technology sector and from maintaining, quote, a balance sheet heavy with investment securities and relatively light on loans, just as interest rates rose and depositors in the tech industry ran light on cash. Among other red flags, CVB had a troubling pattern of what it appeared to be relatively high percent of certain losses on security relative to its total capital assets. And of 108 banks with assets of at least $10 billion last year, Zions Bank Corporation also has a high ratio of such losses to its total equity capital, the report said. But Zions CEO sought to assure customers that the situation at CVB and the situation at Zions are very different. CVB and Signature have unique features that made them unstable amid all the rising interest rates, unique features that Zions just does not have. Additionally, Zions deposits are held in $1.4 million accounts, with sums overwhelmingly smaller than that of the average balance at SVB. Now, we want to hear from you guys. What do you think about the failure of the Silicon Valley Bank? Does it make you nervous when it comes to your own banking choices? Do you think the government should be doing more to bail them out? Do you think the government should be doing less? Are you a customer of Zions? Are you nervous about the possibility of something similar happening at Zions? Be sure to comment below, or you can tweet us at SLTrib. Thank you guys so much for watching. We really do appreciate it. If you want these videos as soon as they are live, be sure that you're subscribed. Thanks.